It's Market Day Report. Hey, we're glad you're with us here. Final trading day of the week, and we open the markets to day trade in about 14 minutes. Let's go to overnight trade. What happened in the corn market? That's where we start. Well, 425.5 in the overnight session. That was down 2.5. Now, keep in mind, though, during the day, not counting the overnight sessions, but during the day, corn has finished higher 7 out of the last 8 sessions. I think we can call that somewhat of a rally. I mean, if your baseball team wins 7 out of 8, 7 out of 8 wins you a World Series in the playoffs. But soybeans doing pretty well. Up 6 out of the last 7 sessions, 10.43 in lower trade overnight. What about the wheat market? Wheat working on 2-day rallies, trying to make it 3 in a row. The December Chicago a little lower in the overnight session. Hard red unchanged, parked at $5, and spring wheat a little lower on the front 2 months. Finally, cotton market, 64.05, down 2 ticks in the overnight session. But here to talk all things row crops, President, Midwest Market Solutions, it's Brian Hoops. All right, Brian, we've got some good rallies going on here in the row crops.
Yeah, things have been pretty good here this week, Tony, and it's mostly about the funds and what they see in the marketplace and what they're doing. They have been buying soybeans. In fact, they bought so many soybeans, they're out of their net short positions and actually estimated to be slightly net long. Now, we haven't had commitment of traders for several weeks. We won't have one today, but we estimate where the funds are, and they're probably close to 20,000 or more net long soybeans. They've also been buying soybean meal, buying corn out of all their short positions back. They're starting to buy a lot of those back, and that's pushed us into what I would say are uptrending markets, or at least we've broken the downtrend in soybean meal and in corn. Maybe we're more in a sideways than a downtrend right at this time. So a lot of it's been technically based, and without the government offices being opened, without getting export numbers, without getting yield data, that's what we're going to trade off of: the seasonals, which are higher, and technicals, which are improving. So we do get some other news out of like South America, and we look at their weather, for instance. They've had good rains last weekend. It's a little bit dry until early part of next week, and then rains return once again around November the 1st. So they really have a great start to their growing season. Corn planting in Argentina is about 30% complete. That's a new record. Last year was the old record at 26% done. So they're on a great pace as far as their planting goes and getting a crop in the ground. A private agency in Brazil, I believe it's Conab, estimated that soybean acres this year would increase 3.5% to 121 million acres. You think about how many acres we plant here in the U.S., around 80 million. Now they're up to over 120 million in Brazil. This is why we need a trade agreement, is because 30 years ago when I started, Brazil was producing a lot less soybeans than what the U.S. was. Now they're going to produce a lot more soybeans than what the U.S. is able to produce, just because they've increased acres so much. And that is why we need a trade agreement, because China is just going to continue to buy from Brazil if there isn't something in the works. So there is a meeting scheduled next Thursday. Trade is looking forward to that meeting, anticipating we may get some sort of an agreement reached, or at least make some headway towards reaching one. Trade wants to be bullish, especially at these price levels. I think the funds, one reason they're buying corn at this $4 level, they're buying wheat off of the $5 level, is they just see this historically as being very cheap, especially when you have other inflationary commodities like gold and silver making new all-time highs.
Okay. Hey, Brian, let's take a quick break. We'll come back. We need to talk livestock and the general economy. How is it? That's all ahead. This is Market Day Report. Now, we've seen rallies as some of our row crops moving higher over the last few sessions, but just the opposite happening right now in the livestock markets. Let's start live cattle. And we did finish in mixed territory yesterday, front 3 months higher, including December, up $1.32 at 241.15. But after that, things kind of turned south. Here's the feeders from yesterday, and the November 361.62 off $2.60. Hog market was lower as well. Both feeders and hogs have lost over 2 consecutive sessions. Where do we go? Brian Hoops, President, Midwest Market Solutions. What are your thoughts?
Well, look at the hog market. First of all, cash markets continue to slide, and futures are anticipating that is going to continue. You look at December futures trading below 82. They're anticipating the cash markets continue to work lower. That index, which was at 104 at one time, now below 100 into the 97, 98 range, will continue to slide lower. Some point, these futures, I think, will find some sort of a bottom in here, but from a technical standpoint, there just isn't anything to suggest we found that quite yet. The cattle market, we did see a little bit of cash trade starting to leak yesterday. Some 239, 240 trade in Kansas. That's going to be fully steady with a week ago in a dress basis, also pretty much steady with last week. So really no changes there as far as the cattle trade from a cash standpoint on a live basis. The feeder cattle markets, the steers at the sale barns, especially Oklahoma City, were lower this week. And I think that's why we're seeing more pressure against the feeder cattle futures than what we're seeing against live cattle. So we're probably going to see a little bit of weakness again this morning in the cattle market. We just could not sustain any gains in the feeder cattle. That market is feeling a little bit heavy. Traders kind of spooked here still about what's happening with increasing the supply of beef. It was confirmed the Trump administration has started to put into place plans to purchase that 80,000 metric tons of beef over the next year from Argentina instead of their normal 20,000 that they usually purchase.
Yeah, good points there, Brian. Always great to see you. Brian Hoops is president of Midwest Market Solutions.